right?
So again, since we have some new participants that just joined, we're going to start at exactly 1 o'clock. You can raise your hand. There's an option at the bottom. We are recording this, so we will upload it to YouTube. If you have any questions, please raise your hand with the option down at the bottom lower right. And again, we want to thank you all for being so patient with this first webinar. We're still kind of learning the functions as we move along. So if you have any questions at the end of this presentation, you can, we're going to have a Q&A time. And yeah, so thank you all. And David?
Awesome. Hey, guys. We got about a minute to go. We'll let any stragglers come in and get started. Guys, we're not looking to keep you all day. This first presentation, we're probably going to go about 20 minutes, half hour, somewhere in that neighborhood. I want to just kind of lay the expectation, though. There's no possible way I can get through everything having to do with credit reporting in 20 minutes. All right. So my name and contact information. You'll have that, by the time you leave here today, and don't hesitate to use it. Right. If you've got questions about anything having to do at all with credit, it's a big beast, and hopefully this can be part of an ongoing series to get more and more in depth with credit scoring. Right. Because ultimately, there's a lot of misnomenclatures out there, a lot of misinformation. We want to dispel a lot of that as we go through this series. All right, guys, so we got about 30 seconds. I'm going to open it up real quick and just ask, is there anything in particular, as we go through this, any questions that you have in the back of your mind that you're hoping that we answer here? What do you want to know about credit? If I get no answers, I'm just going to assume that, whatever I say is right. So,
Hi, Mama. Do you have any questions about your credit? We can't hear you. I think you have to unmute her.
Let's go ahead and unmute all. Everyone should be unmuted right now unless you have your mic muted. No?
Also, you can text me if you have questions and you want to remain anonymous. Send me a text, 720-525-1801, and I would be more than happy to ask the question if you, like I said, if you want some to remain anonymous.
Perfect. Okay, guys, so I want to be respectful of everyone's time. We are it's 1 o'clock, so let's go ahead and jump in, okay? I'm going to mute everyone's microphone. And if you have a question, raise your hand. There's that functionality where you can raise a hand if you have a question. Go ahead and do that, and I will unmute you, okay? Okay. So with that said, Michelle, give me a nod if you can hear me.
Yes.
Okay, sweet. All right, guys, so my name is David MG. I'm the president of Credit Advisor. Number one, I want to say a huge thank you to Michelle Fernandez with Propertyville for putting this on. It's not often that you meet a real estate agent or even a loan officer that is going to go that extra mile for you. And in the time that I've known Michelle, she's always proven that she really wants what's best for her clients. So can't thank you enough and look forward to doing these ongoing, okay? All right, guys, so like I said, my name is David MG. I know you're probably looking at your screen there like, how am I going to remember that name, right? It's a four-letter word. It's tough to pronounce. MG, right? So I'm going to tell you, the same thing that I tell everyone, get that seed to stick in your head. It is pronounced MG like mighty good, all right? Unless you're a vet and veteran, and then it's machine gun, all right? So whichever one helps you to remember. Credit Advisor, guys, is a full-service credit management and repair firm, all right? So we are dedicated to credit education, helping people understand their scores, and then helping them to improve their credit so that way they can use it for a slew of things, not only buying a house, but really everything having to do with finances in your life. And odds are good that even if you don't have a score right now, you're paying for stuff that could give you a score, right? And that's the thing is I hear from people a lot of times, they're like, Dave, I don't like credit. I don't know if anybody here can relate to that, but it comes from not understanding it all the way is what I found, right? And so what happens is people don't, get credit cards. They don't participate in anything having to do with credit. They don't buy a house, right? And a lot of that is because they're afraid and they hear the horror stories. And I'm here to tell you that a lot of those horror stories are true. There's a lot of scams you got to look out for when it comes to credit. And we're going to get through all of that in the course of this series. All right. So if you have any questions, again, raise your hand. Michelle, you've got your hand up. Do you have a question?
I have, no, I don't. I'm sorry.
Okay. I'm going to lower your hand right now.
Okay.
And let's go ahead and jump into what we're going to cover in this is the first presentation of the series. Okay. So being that we don't have a lot of time and being that credit is such a big animal, we're going to start at the basics here. What is it? What industries, should you be looking for to use your credit? Pulling credit scores, pulling your report. There's a couple of industries that without fail, they're going to be looking at credit. Okay. We want to go over where did credit come from? Just a quick history on, how it plays into your everyday life. And then before we leave here today, I want to make sure that I'm giving you at least 4 tips on what you can do to start proactively managing your own credit file. There's a lot that you can do to manage your own credit. Okay. I see we've got looks like a hand up from, here we go. LGK40. What is your question?
I had a bankruptcy. How do I do it from after my bankruptcy? It's been about 6 years now.
Okay, perfect. So that's a great question. I'm going to lower your hand and then we'll answer that as we go along. Okay. A lot of people are suffering from bankruptcies on their credit report. They're recovering from, medical emergencies, divorce. A lot of times when people start a new business, they overextend themselves or they leverage their credit cards. They see their credit card take a hit. And all of these things are, they're going to require a little bit of putting back together. Now, the good news is that a bankruptcy, it's something that can be removed off your credit report. And even if you can't get it removed on your own, time will take care of it. A bankruptcy is going to stay on your credit report for 10 years. Sounds like a long time, right? Whereas a collection, a late pay, charge off, that's only going to stay on for 7 years. Part of the interesting thing, and we'll get to this, is when that clock starts ticking. How do you know when it's been 7 years, right? And that's not such an easy answer a lot of times because a lot of people don't know what they should be looking for, all right? So first things first, what industries are going to be using credit for reporting? You see here on this list, guys, a lot of this is going to look really familiar to you because you know it, right? You go apply for a mortgage, they're going to pull your credit, okay? You go to buy a car, they pull your credit, right? Unless you go to like a buy here, pay here lot over off of Alameda or Colfax or something, and then they don't pull your credit, okay? We'll talk about why that isn't always the best thing to do just because of interest rates and whatnot. But typically, if you go to a normal car lot, they're going to pull your credit. Credit cards, obviously, everyone is accustomed to them pulling your credit, right? Installment loans like personal loans, business loans. Anytime you go to, you're going to go buy some furniture and they're going to give you 0 down, no payments, no interest for a year. They're pulling your credit, right, to give you that offer. And then the one that throws a lot of people off is that last one right down here, insurance. What? Insurance? Yes, insurance pulls your credit, which still to me, guys, after years of doing this, still doesn't make a whole lot of sense. It's like, Mr. Smith, you've got a bad credit score, so you must be more likely to run over little old ladies in the parking lot, right? I don't know how credit really plays in, but it does. You get better premiums, the better your credit score gets, okay? Here's the big one. A lot of people don't realize that 7 out of 10 employers are going to pull credit before making a job offer. They don't look at your score. They don't care about your score. They're looking at the items on your report. They look at it as a judgment of character. Okay, so here, when you start connecting all the dots, you see that, wow, so if I don't have good credit, or if I don't have credit at all, if I don't participate in it, then I'm going to have trouble getting those jobs that are going to be supervisors, that pay a little bit more, what have you. You're not able to buy a car at a decent interest rate, right? You're not able to purchase a home. And so it gets very, very hard to build lifetime wealth. That's the sole reason that we're here today, is to help you guys understand what you can do to build lifetime wealth, right? And use your credit score as that leverage, okay? First things first, I'm gonna unmute everyone. If you're not muted, I wanna hear your answers. What is credit? What is credit to you?
Credit. Wait, where do I raise my hand?
Oh, we can hear you.
We can hear
Go
you.
ahead.
I
We can
unmuted
hear
you.
Okay. Credit is if you're borrowing to purchase something and then you promise to pay back.
That is exactly right. Very, very well said. Your name isn't posted, but you are LGK40. Awesome. That's one of the best answers that I've heard, actually. I've heard all sorts of stuff, guys. I'm going to go back to muting everyone here. I've heard everything. I think it was Michelle in her first workshop together. She's like, it is your life on paper. And I'm like, whoa, easy, Tiger. Yes, it is your financial life, right? But essentially what it is if you're going to borrow money from somebody, they want to make sure you're going to be able to pay it back, right? Think about credit like this. It's a way of paying for lumpy purchases. What's a lumpy purchase? Well, you can kind of gather from, the pictures here. Got a picture of a farm, right? Got a picture of a car. And then that, if anyone's ever seen one of those, that's an old school, like old time washing machine. Okay, that's a lumpy purchase. In other words, it's something that you don't pay for on a regular basis, right? It's something that's going to be a large sum of money, a big lump in your overall expenses. So the way it originally started is that, let me go back one here. The way it originally started is that back in the 1800s, if you're a property owner, you would have to save up your money, right? Save up for 30 years, work as a tenant farmer. And then finally, after you save up enough money, boom, you go buy your own piece of property, right? Well, what happens with credit is that it changes the timing of that. So rather than have to save your pennies for 30 years, like a layaway program, right? It's changing the timing. You can buy the property today and make payments on it over time. Okay, and that is exactly what credit is supposed to be. It's a way of paying for lumpy purchases. Well, it worked so well for the real estate industry that car manufacturers had the light bulb go off and they're like, wait a second, what if we start selling cars on credit, right? Well, if somebody doesn't have to save all that, save up their money and wait to buy the car, that means we can sell more cars today. And that's exactly what happened, right? They introduced credit, started selling a ton more cars. And then it works so well for the auto industry. That's why the washing machine is on here. Appliances, furniture, right? They're like, if it works well for real estate and it works well for cars, let's sell that. And guess what? It worked so well that the economy took a major boom. Why is that? Right? Because they're able to sell a lot more stuff. If you can sell more cars, you got more cash flow. And so what's going to happen is you're going to take that extra profit and you're going to put that into innovation. Okay? That's why we're not driving around Ford Model Ts anymore, are we? No, man, Tesla's got a computer system in the car. It's self-driving, right? That innovation came from these companies making so much more in profit. Okay, so in itself, credit isn't really a bad thing, right? I mean, it's really caused a lot of stimulation, a lot of growth within the economy, and it makes it possible for you to buy not only, a little tiny shack, but you can get a pretty decent house. You can get a $400,000 or $500,000 house. Who's got $400,000 or $500,000 sitting around in the bank, right? You can get the better washing machines, the better cars, and it works so well that it was only a matter of time, okay, before consumer credit was born. One of the first credit card companies, as we know them, might throw you off a little bit here because I know you know their name, Equifax. Equifax, the credit bureau, in 1899 became one of the first consumer credit card companies because it worked so well for all these other places that they said, hey, why don't we give somebody a line of credit that they can buy whatever they want, not just a lumpy purchase, but buy yourself some socks, buy yourself some gum, right? And that's what ends up happening. Everyone's got credit cards in their pocket today, right? Well, so here's where the dark side comes in. As soon as you give people the power to buy whatever they want and put it on credit, so I don't have to pay for it today, I have to pay for it sometime in the who knows where future. What happens when people get overextended and they buy things that they actually can't afford? Economy goes crashing down. And we've had multiple examples of this throughout history to remind us what happens when people can't pay their bills, right? Most recent example we have was the recession. And let me admit Steph here. The recession, right? 2007 to 2009. Well, what happened is that it was the housing bubble. You guys have heard of the subprime days. This is exactly what happened. People whose credit score was not where it should be, people whose debt to income was all out of whack, were still able to qualify for subprime loans. And there were a lot of them out there, guys. And so what happens is that because of the lax lending practices, a lot of people bought houses that they can't afford. And the recession was an example of what happens when millions and millions of people can't pay that back. Okay, so rather than have that happen, there has to be a fail-safe, right? Because yes, we want to be able to extend credit, but we want to be able to extend credit responsibly. And so what happened? Credit reporting was born. This happened back in the 70s. And you guys know these places as Equifax, TransUnion, and Experian, the big three credit bureaus, okay? Now, a couple things that we got to remember about the credit bureaus. They are multi-billion-dollar corporations, okay? These are not charities, guys. They're in it to make money, right? And so what happens is this is why it's so hard for you to find your credit score out there. Everybody wants to charge you for it, right? That's not the bureaus charging you that money. All the bureaus are is data storage warehouses is what they're called, okay? So they collect data that other people say about you. You've got your creditors. You take out a car loan. The bank who lends you the money is going to report everything about your loan to the credit bureaus. Yes, this is how much the payment is. This is the date they paid it on, right? Why are they doing that? Why is it worthwhile for them to report it all to the credit bureaus, knowing that they have to pay a fee? They have to pay a subscription fee to do it. So why do it? Because they want to hold you accountable, right? They want to offer you an incentive. People work really, really well off of incentives, don't they? I do. I sure as heck do, you know? So if you've got negative incentive, in other words, your credit score is going to take a big hit and go down and cost you money, then that's pretty good incentive to help you pay your bill on time. I'll remember to pay that one because it's associated with my credit, okay? And so the credit bureaus store all that data. Where your score comes from is a place called FICO, and I'm sure you guys have heard of FICO. They're their own company. FICO is their own multi-billion-dollar corporation. It stands for Fair Isaac Corporation. They're in the business of creating mathematical formulas. And what that formula does is going to take all the information from your credit report and compile that and then spit it out in a nice little score. So somebody without thinking too hard can look at you and be like, well, you're a 720. Tell you what, LGK40, you look like a good deal to me. I'm going to go ahead and extend you some money. Or you're a 480. Nah, not going to happen, right? It's just risk. That person wants to get paid back, okay? I'm going to unmute real quick. Be sure you put your hands up if you have questions. 30-second questions.
What would happen is you would just cut a PO, and then we would deliver within your.
Okay. Perfect. So moving on. Okay, guys, so knowing what credit is, knowing that you have this report that people say about you and you really have no control over what then that they're going to put that on your credit report. Check this out. They don't even have to verify that you actually owe them money. There's no law that says that the credit bureaus have to verify any of the information that people tell them, unless it is a judgment. Okay, so if you have a judgment, then a law was passed about 2.5 years ago saying that the credit bureaus have to verify that it actually belongs to you before they can put it on your credit report. Well, here's what happened. Credit bureaus got together and they said, oh man, we have just 300 million people in this country, right? Everyone who's got a social security number has a credit report, so there's no way we can verify all that information. So rather than verify that judgments are correct, they just don't publish them. All right. But they still publish collections and they still publish your late fees and your charge-offs because they don't have to verify that it's accurate. Okay. So you'll see that step number 1 right here is to obtain a fresh copy of your credit report. You're wise to do this at least once a year, especially if you've got a common name, right? If your last name is Smith, man, don't even get me started. I have a client signed up. His last name is Gonzalez, and he literally, we pulled his credit report, and there's 3 different social security numbers on this man's credit report because he's got a common last name. And what happens if you've got a common last name, then odds are really good that someone else with that name is going to have an outstanding debt somewhere, and that name commonality is enough to land that collection or that derogatory remark on your credit report. Okay. As a matter of fact, with this gentleman, just to not to bore you to pieces here, but just to tell you what happened with him is you're looking through and on the personal information section of his credit report, okay, that is what says all of your previous addresses, all of your phone numbers, any name variations that you've ever gone by, or any typos. Like let's say I have another client that just enrolled recently and their last name is Johnston with a T. You take that T out, now it's Johnson. Man, that's a lot of Johnsons out there, and because of that typo, odds are good that they have someone else's information on their report. It's called identity fraud. It's actually so common that 70% of Americans have it going on. So pull a copy of your credit report. You can get it for free at annualcreditreport.com. You get 1 free pull every year. It is not going to give you your credit score. That's why it's free. Remember, you have to pay to get a FICO score, okay? Unless you're signed up with like a credit card company or something like that. And then they'll give it to you for free because they're making money off of you, okay? Then it's worth their while. If you have questions on where you should monitor your credit, like where the scores are most accurate, feel free to email, call, text me afterwards, and I'll get you a couple of options on where you can monitor your credit, okay? So once a year, pull a copy of your credit. Number 2, you want to review that thing real closely. You're looking for mistakes, errors, any inaccuracies on there. Look for your name spelling off. Look for phone numbers that you don't recognize. Look for addresses you don't recognize. And frankly, look for addresses that go way back. Because your addresses never fall off. We talked about bankruptcies falling off after 10 years, right? Collections falling off after 7. Addresses, phone numbers, previous employers, those never fall off, okay? So you want to get everything from back in 2002 or the 90s. If you don't live at that address anymore, you want to get it removed off your credit report. And that goes into number 3. File formal investigations with anything that you don't believe is accurate on your credit report, okay? The Fair Credit Reporting Act is the law that allows you to get stuff removed off the report. And what that says is that anything that's outdated, has mistakes, errors, or inaccuracies legally must be either updated so that way it is correct or legally removed off your credit report. However, guys, I highly, highly encourage you, don't just log on to Credit Karma and start filing disputes all over the place, okay? It's just not effective. It's an electronic dispute. We have to remember the credit bureaus are called bureaus. It's a bureaucracy, okay? They're lazy. They don't like doing what they're supposed to do sometimes. And so if you just file an electronic dispute, odds are good that they're just going to throw it out. They're not even going to do it. And then you can't do another dispute for at least 6 months. So to fix your own credit through online disputes takes forever. What you really have to do is sit down and write written letters, sit down, write it, send it to the creditor, send it to the credit bureaus. There's a certain order to go in, on how to do that. So call me if you have questions about disputes and investigations, because that's a whole world all by itself. We'll get into that in upcoming video series, okay? That is something that you can hire out for, okay? My company does formal investigations as well as coaching, all right? So either way, call us and we'll get you that guidance that you need, okay? Last thing, getting the negatives off of there is one thing. But if you don't have any negatives on there, right, then it's all about your positive credit. You want to think about your credit score like a hot air balloon. You got negative items like late pays and collections and all that weighing it down like sandbags in a hot air balloon. That's going to weigh it down. Investigations can get some of those removed off of there. Time will get a lot of that removed off of there, right? Just being responsible and proactive with your credit will mitigate a lot of that, okay? Investigations, that'll get it off of there. However, even if there's no negatives on there and your hot air balloon is flat, there's no hot air in it, your score's still not going to go up. It doesn't matter if there's no negatives. So you want to inflate positive credit. Best way to do that is to open an account somewhere. Either open a credit card, buy a car, buy a house, right? Something like those things. Those are going to report to the bureaus, and every time you make your payment on time, you're going to get positive credit to inflate a little bit more in your balloon, okay? There are a number of ways that we can expedite that process and really get some positive credit going quickly, okay, in the right circumstance. But I'll tell you right now, the one big one is a credit card. If you don't have a credit card and you don't have any credit, let me know. We'll get you some options on opening a secured credit card or a card that's specifically designed to establish credit. There's a ton of options out there that are guaranteed approvals because it requires that you put down a security deposit, okay? Just a small one. And then you get a small limit credit card, and then you're off to the races. You have established positive credit. Number one rule for inflating positive credit is be on time with your payments, okay? Don't go late. If cash flow is tight, right? Like let's say you're between jobs or, medical emergency came up, well, whatever. Times are tight right now and you don't have a whole lot of extra money and you got to go late on a bill. I highly urge you to go late on something that doesn't report to the credit bureaus. Go late on a cell phone bill. Go late on, your water bill or something like that, Yeah, you'll have to pay a late fee. Anytime you're tight on cash flow, it's painful to dig out of that hole. Well, I'm not saying it's going to be a cakewalk, but go late on one of those because it's not going to destroy your credit. If you go late on your credit card bill or your car payment or a mortgage, guys, that can tank your credit score by up to 120 points for that one late pay. So don't do it, right? If anything, here's what you do. Call up your auto loan, especially if you've had it open for over a year, and especially if you've never had any late payments. If you've had a car loan, never any late payments, open for more than a year, cash flows tight, you're like, oh my gosh, how am I going to make ends meet? Call up your lender and ask them to skip the month, right? They'll usually do that for you 1 month out of the year. Hey, is there any way that I can skip this payment? Now, it's not free. They're going to take that payment and tack it onto the back of your loan, and you're going to pay interest on it. So it's not like they're doing you a huge favor, right? But if you can strike that agreement before there's problems, then sure, they'll probably give you a skip month without damaging your credit score. That just freed up a couple $100 out of your car payment that you can use for groceries or gas or whatever it is, okay? So be sure you protect your positive credit accounts, okay? That's what I have for you today in this first series, guys. My name is David MG. I am the co-founder of Credit Advisor, Credit Coach. And with that said, I'm going to open this thing up for some questions. So hold on. Where's my mute button's not here anymore.
Hey, David, can you hear me?
I can hear you.
Okay, so I would also like to mention something that you had discussed in the class that I had attended. So as for myself, this has been a couple of years. I had a credit score of 420, which is but I worked diligently. I took a credit class and I disputed some items on there, and my credit score jumped from a 420 to like mid 600. But something I did not know that you brought to my attention was, if you do an online dispute through Credit Karma, that's going to take away your appeal power, which is why you said to submit those disputes in writing, because then if they do deny your request, you do have an option to appeal that denial, which I did not know. So that was great information.
Yeah, guys, investigations aren't as cut and dried as everyone would like to think. The bureaus want you to think it's super easy. Just file this online dispute and you're good to go. But really what that is, it's a ploy to get you to do it so that way they can throw it out. Really, it's a matter of pushing their hand. We had a case come back one time where here's the collection. The name of the collection agency, I kid you not, is the word unknown. The word unknown there on the credit report. I'm sitting here thinking, man, this could be easy peasy. There's no way that thing's going to stay on the credit report. Well, Experian and TransUnion agreed with us. They removed it. Equifax, man, leave it to Equifax to come back and say, nope, we verified it. It's right. We're sitting here at the office like, what are you talking about? You didn't do anything. They probably didn't even open up the file, right? They just threw it out. And so what you end up having to do is a reinvestigation and relaunch the whole thing and appeal it. Again, this is why you do written letters, to avoid that. Yeah, great point, Michelle. What other questions, guys, while we still are connected here? Yes, LGK40.
Yes, I had something with the bank,
Okay.
and I had bought like a pot from the pot machine for $1.50, and it ended up costing me almost $300. So I never banked that. So how would I get that off of my credit report?
That's a good example of something that is exorbitant, right? So this is the other thing, is that people tell me all the time, I'm going through a credit report and they're like, Dave, that is my credit card. That's my charge off. That's mine, right? It doesn't belong to somebody else. Okay, I get it. But O.J. Simpson was innocent, wasn't he? He was proven not guilty, and that's something totally different, right? See, federal law gives you the right to investigate anything that damages your credit score. And what they do is that creditor has to prove that the information is correct, accurate, verifiable, and that it belongs to you. So they might be able to prove that it belongs to you, but can they prove that that balance is right? Because they've got to provide hard copies of their math. They can't just claim that it's $200, right? They've got to show an actual ledger that accounts for that if they want to keep it on your credit report. So I would love to see that account, but that would be a great one that you would want to have investigated with the creditor and the credit bureaus to get removed off of your credit report.
Okay, well, they kicked me off of the bank account because this was Public Service Credit Union, and I was with them for over 20 years. And this was the first thing that I ever did. I didn't know that the pop $1.50 was going to cost me $300, but I tried to pay it. But since they closed out my account, they said they couldn't accept my payment.
Unfortunately, it's not the first time that I've heard that, because what happens is that your creditors are regularly looking into you. After you have been approved for that account, they're regularly going to do what they call promotional inquiries and check your score. Because if your score starts going down, they want to know that, right? If you become a risk, then they want to know that. And so what happens is that if your score has gone down since you opened it up, then yeah, that doesn't surprise me that they would totally close you out and cancel the account, which is unfortunate. And that's why it's so damaging, when you have these negative items on your report. Now, the good news is that when that item comes off, then you'll be right back to being credit worthy, and you'll be able to go right back with them. But look, I see it happen a lot. I see it happen a lot of times where someone's got a credit card and they've got a $300 balance on this credit card that they've been working on for a while. And meanwhile, maybe they hit a rough spot and their credit score's gone down since they opened up that card. Finally, they get their tax return back or whatever, and they pay that credit card balance all the way down to zero. Credit card company then closes the account altogether because their score has gone down, even though they've never actually been late on the account. Maybe they've had it open for 5 years. Doesn't matter. That's another reason that I never recommend paying a credit card all the way down to zero. You don't want to run that risk, right? Pay it down to $10. Don't pay it down to zero. Pay it down to $10. Now, if I am anticipating your question, it's going to be, well, Dave, don't I have to pay interest on that $10? And my answer to you would be, yeah, you might have to pay 25 cents interest, right? That's better than the credit card company closing the account, and you'll actually get more positive credit as a result. So it's worth the interest on $10 to do that way. Good question.
Okay. That sounds really good.
What else?
Does anybody else have any questions whatsoever? And then after they ask, can we mute everybody's microphones again, because I think somebody's cooking and it's like,
I know that's hurting my ears.
Okay, muted. Oh, hold on, Michelle. I just muted you. Okay, go ahead.
Okay, so basically, does anybody else have any questions? Like, obviously, you all have joined this webinar with intention, and we're here to kind of just address any questions or concerns that you have. Don't be shy. Don't be embarrassed.
Also, guys, I will throw this out. You know, if you've got questions, because again, we got a lot to go over in upcoming series. What we want to do is break down exactly what goes into a credit score. I want to empower you guys with knowing the math here, okay? We also want to get specific on how to get negative accounts removed. We also want to lay out some best practices for things like, oh, student loans. Dave, I got student loans that are in collections with the federal government. What do I do about that? We can answer all of that stuff, guys, but if we were to do that in one day, we'd be here for 2.5 hours. I know, because we have a 2.5 hour workshop, and that's the stuff we cover in it, okay? So if you've got questions, email Michelle, email myself, okay? And we'll compile all those questions, and that's what we'll bring to the next series, okay? All right. If there's no other questions, guys, then we're going to go ahead and conclude today's webinar. I hope it was worthwhile, and I'd love to get some feedback. Again, I'd love to know what you're curious about. Our website is www.creditadvisorinc.com. You got my email address right there. Michelle, what's your email address?
Sell with Michelle. That's Michelle with 2 L's and no E at gmail.com.
Awesome. And what's your phone number, just because I know it's not displayed up here?
720-525-1801.
Okay.
So yeah, if you all have any questions, feel free to reach out. You are on some form of either my social media platforms, either Snapchat, Instagram, Facebook, or there's a couple people I don't recognize. But if you have any questions, get a hold of me. I can pass, any material along to you that would be resourceful. But David's website has a ton of resources. There's videos, it's very beneficial. So if you do need help with your credit, please visit his website, give him a call. He's genius at what he does. So thank you all so much for joining. Yeah, so well, we'll let you continue with your day, and we'll send a blast for the next webinar.
Absolutely. All right. Thank you, guys.
Bye. Bye, David. Thank you.
Bye. Yeah, absolutely.